Welcome back to Markets Today. It's Thursday. We are discussing the banking sector. Before I introduce our guest in studio, allow me to just give you an overview of the breaking news in the financial world this afternoon. The Kenya National Bureau of Statistics has just released the much-awaited second quarter GDP growth numbers. These are down 5.7 percentage points. Of course, we were expecting a drop, but not negative growth. This is the first time that we are seeing a negative growth rate, and the rate for that particular quarter, which was the months of April, May, and June, was minus 5.7 percentage points. We will just take a brief and just understand what was happening in these numbers, but we will be able to unpack this in subsequent shows. To discuss this as well as banks, we are joined in studio by Mr. Reginald Kazutu, who is an economist. Welcome to the show, Reginald.
Thank you, Mbite.
We've just looked at the numbers. You've just flagged the numbers that have come out, minus 5.7 percentage growth. Yet Central Bank has been telling us it would be bad, but we'll probably have 1 percentage growth. But this is negative growth for the quarter. What's your take on this?
Firstly, I think it's an indictment on our policymakers, because I think Treasury itself had a projection of a 2.5 or 3% growth in quarter two, and that's what they were working with. So if policymakers based all the policy decisions that they've made between now and between end of quarter one and now, based on information of growth, vis-a-vis now what has come out, we start wondering whether the policy is actually going to be effective or they're actually going to be counterproductive in terms of what we're going to see. 5.7% contraction in the light of other people that have released their results in terms of Rwanda, Nigeria, South Africa, seems like a fairly good number, but okay, it's still a contraction. But we need to look at it in the context of Kenya. What does a 5.7% contraction mean in terms of debt to GDP? What does that mean in terms of tax revenue? So there are a lot of things which revolve around this GDP figure, which is taking forever to come. And yes, and I think it would have been worse if tea production didn't go up, if coffee production didn't go up. And as we know, as we're getting into quarter three, quarter four, tea prices have slumped down. So I'm wondering if now remove what had anchored even the quarter two, are we likely to see a lower, even a worse situation in quarter three? There has been some opening up, but people need to know that opening up came around August, September, and the quarter is July, August, September. Is there much activity that happened in September? Not that much. So if you're going to see any real change, you most probably see it in quarter four, where you have schools that have been opened, bars have been opened, eateries have been opened. But I don't think quarter three will give any reprieve to this contraction. It might actually be another contraction. Okay,
so fair enough, because I think now we are beginning to understand why the economy is slowly opening back, because clearly you can already see from the contraction that the pain in terms of the economy is considerably higher than the minus 5.7% that we have seen. You bring out a very interesting point, Reginald. You say the government policy makers, that's the central bank as well as Treasury, have been making decisions on the assumption of growth. Is there anything that you expect to change now that we have numbers that are saying growth? Actually, there was no growth. It was negative growth in that quarter. And also bearing in mind that for all of us, I think the worst period was April, May, June. But after June, we sort of started getting the sentiment from the business community like, okay, we have figured out how to get our heads around this. Do you expect any policy changes? Are there some things you'd expect to see based on these numbers coming out today?
It's going to be difficult because, again, these are June numbers. We are in quarter four. Ideally, they should be operating and working with at latest
September,
quarter three,
yes,
September numbers. So if we are in October, mid-October, and we're getting June numbers, I'm wondering when we're going to get September numbers. That will be next year.
Yes.
So I think our policy makers, it should be actually a policy decision on when should numbers actually come out. Do we need to fund Kenya National Bureau of Statistics to give us more of these numbers more often? But with what has come out, there are sectors that have definitely been hit hard, and I guess when we discuss the banks, we'll see what impact that actually has on the performance of the banking stocks, what that does to employment, because if you look at accommodation, food, hotel, restaurants, pretty much the retail sector is where the majority of the employment is in this country. So you are saying, where is the employment numbers actually going to come out at? Especially in the formal and in the informal sector.
Okay.
So it's definitely going to have a ripple effect on performance of banks.
Okay.
In terms of them being profitable. Their NPLs will also be, because if the economy is going to contract, then you expect their NPLs to even suffer more as we go forward. KRA will be worried about this. Definitely very worried about this. And
Tax
I think,
collections.
yes,
Okay.
and I think Treasury will be the worst worried.
That's worrisome, because you have a budget that's 3.2 trillion.
Yes, which is already is a 1 trillion deficit.
Already, without,
Yes.
and this was before COVID.
Yeah.
Now you have the onset of COVID, and you have an economy that, by the formal standards, has contracted. Informally, I'm sure the contraction is considerably higher. How are we going to fund this? So will the government just keep borrowing? I know taxes are, we're seeing new modalities of collecting tax. So is it that people are unwilling to pay tax, or probably there's just no money? What happens to that gap, which now keeps growing higher and higher in terms of the fiscal deficit?
I'll give you an example. If Safaricom's profitability reduces by 5-10%, that's KRA's revenue that has also gone down by 5-10%. So luckily Safaricom, from their results, they did grow. But if you look at the combined effect of other taxpayers who have suffered the same contraction, you've seen second quarter banking results. No one grew.
Yes.
People are dropping by 40%. That's all tax revenue that's going from the main sector. People have lost jobs, so that's income tax on the PAYE side also going. When people have lost jobs, that means consumption also reduces. As we're seeing, the sector that is dropped the most in quarter 2 is actually accommodation, food, and restaurant. That means people also reducing how much they buy because I've lost my job. So once you reduce what people are buying, VAT also drastically reduces. Okay. So I'm sure Treasury right now are scratching their head of figuring out how are we going to fund. Okay. In this case, it's not even funding the budget, is how are we going to fund our debt, because they still have to continue making repayments.
And especially the foreign part of the debt. Okay, fair enough. Thank you for that. Is there anything else that has stood out for you? I know it's a bit too soon because the numbers have just come out.
Gone through,
okay, not to worry. But thank you for that. Those are very good perspectives. You're saying GDP numbers are down, second quarter numbers are out. Second quarter is the period ending June 2020. GDP has contracted by 5.7 percentage points. I have never seen a contraction. We're expecting some little bit of growth. So this is the news that has come out. We've just taken a brief from Reginald, but we'll be able to give you more information in subsequent shows. Now, turning back to the core topic for today's show, the banking sector. Third quarter has come to an end, ended in September, on the 30th of September. What next for this sector? And the question we're trying to understand, is there an opportunity for you to make an investment in the banking stocks, and could their outlook change? Reginald is still having that conversation with us. Reginald, let's just briefly talk through the banking sector. We know second quarter, we covered that, but what has your read through been for the third quarter, and what do you think is likely to happen with the banks, especially in line with some of the news that we have seen with a possible contraction of private sector credit?
If you are to look at quarter 3, and you're looking at the banking sector, like any other investment, you're looking at future cash flow. If I'm an investor, I want to see what's the cash flow I'm going to get from these guys, and how do they generate cash flow? You have to look at their balance sheets, and if you look at the current balance sheet for most banks, their two largest assets is government securities and loans. In terms of investment, property is very, very little, and some other investments are very little. So the two major ones is actually government loans, which is government bonds, and loans to you and me. Yeah. So if you look at most of the top 10 banks, I can say all of the banks. If you look at them, if you look at their balance sheets, those two assets will most probably take close to 80 to 90%. So we look at the current environment we are operating in, which is a very low interest rate environment. Yeah. So on a low interest rate environment, you are saying most banks have shifted their funds to government bonds, and we have been seeing the trajectory of government bonds in terms of interest or coupons, they have been trending downwards. So predominantly 30% to 40% of your interest generating assets is suffering from declining interest rates, so to speak. So ideally, I would expect interest income to also reduce. Then you come to the loan book. If you then look at the loan book, which is the biggest asset, close to 50% of the assets of a bank. Give an example, KCB restructured 120 billion,
yes,
which is close to 21% of their loan book.
Okay.
Diamond Trust restructured 31% of their loan book, around 32%. The person that restructured the less is Cooperative Bank, who restructured only 14%.
When people have had questions about that.
Yeah, 14% of their loan book. So if you are saying, if we take an example of Equity Bank, which restructured 92 billion, you're saying ideally this 92 billion is not going to earn them anything in the next 3 months. Then if you go to still to their balance sheet and you look at the other disclosures, gross non-performing loans for Equity Bank are already around, I think, 30 something, if I'm not wrong, around 30 something billion.
Okay.
So those are loans which are that have already been categorized as non-performing. That's 32 billion. Yeah. So even if this 92, 50% of it ends up being non-performing, that automatically their gross non-performing loans will move from 32 to around 75, 76 billion.
Okay.
That's 76 billion not earning anything.
That's a lot.
But to put it into context,
yes,
so they have 92 billion, which
yes,
they've restructured, so
yes,
I don't think it will earn anything. Yeah. And then you have non-performing loans. That has already been categorized as non-performing as 35 billion. So you already have 120 something billion of their loan book, which ideally now that will come to something like 30-40%. So then, therefore, I would expect their revenue to also suffer the same decline. That's interest income.
Okay.
May
I interject there,
yes,
just before you go on? So you're saying you're giving a description in terms of what has been restructured and what could possibly go bad. When you say that there is a possibility that this will have a direct impact on revenue, what happens when something is restructured? Does that mean that that loan stops earning interest income, or what happens? Just help us understand that particular part.
So in this case, none of the banks have actually come out to say how they've restructured, but ideally a restructured loan, rather, one, the tenure is increased so that you reduce the monthly repayment. So the longer the tenure, the lower the monthly repayment. But if you're looking at these amounts,
all right,
it will most probably be moratoriums.
Okay.
So moratorium until December, will start repaying in January.
Okay.
But most of the banks have not come out to actually say what they have done. But ideally, in restructuring, it's either moratorium or extension of the loan repayment period. But either of the two reduce what the bank will earn on a monthly.
Because I think what you're saying is, and that makes sense, what you're saying is, if you restructure a loan, perhaps I used to pay 100,000 to the bank, and that was split between interest and principal. If that reduces to 50,000, the interest that the bank is already booking there has reduced.
Also reduces.
Okay, fantastic. Yeah. We need to take a quick break. When we come back, we can continue this conversation. I hope you're paying attention. We're saying that, yes, there has been an element of a restructure. The economy has actually contracted. So what does this mean for the banking sector? Stay tuned. Tell us where you're watching us from, what you would like to know. The SMS line is up on your screens, or you could reach out to us. That's at Metropole TV or at Mbithemwema. See you after the break.